All right, so on the Money Show, we make sure that we don't just talk about investing in mutual funds, but also help you meet the brains behind these funds. And this week's Meet Your Fund Manager segment, we will be discussing Kotak Flexicap, and we have on board Harsha Upadhyaya, CIO Equity, Kotak AMC, to discuss about the fund and about the markets also. Hi, Harsha, and welcome to the Money Show. And we will talk about the Flexicap Fund today, and the message that's going around is elephant can dance. So AUM has crossed 38,000 crore and indeed a huge elephant. But then how do you decode the dance out here?
The fund is quite large in terms of the AUM, but clearly I think we have stuck to our discipline. The investment discipline that we have followed through cycles has really been fruitful in terms of investor returns, I would say. What we do in our fund is to look for opportunities which have compounding characteristics. So we look for businesses which are scalable, which have competitive advantage in their segment of operations. And also we look for managements which have a great track record in terms of giving growth to shareholders as well as aligning with minority shareholders. And while we do all of this, we also focus on cash flow generation and capital allocation policies of the company. And finally, the valuation filter comes in. And if we believe that the valuations are fair, then we like to put those stocks in the portfolio. And generally, we buy and hold stocks for a long period of time. And that's the discipline that we have followed over the cycles over the last 11 years.
All right, Harsha. Now, before I go on with the questions, which are with the fund-specific questions, let's understand the basic sense of market. Our market rallies that we are seeing right now, is it sustainable? Do you think the party is over? And how are the valuations?
In fact, today we have made a new high on Nifty, and on mid-cap, we made a high quite some time back. So clearly, market has been an uptrend. Having said that, I think the fundamentals will take a little more time in terms of improving further. We do expect commodity prices to cool off from here, and that should help overall margins for most of the manufacturing companies in the country. But that's already kind of baked in terms of expectations. So to that extent, I would say part of the rally that we have seen already seems to have been discounted in terms of what is likely to come in terms of earnings growth over the next few quarters. However, the valuations still are not very expensive. So to that extent, I think the long-term investors can still continue to make staggered and disciplined investments and can continue to hope for decent returns from equities, even from these levels.
What about mid-cap and small-cap valuation? You think, are they overpriced, and is there more steam left, according to you, for more, maybe a month's time?
Clearly, in terms of valuations, they have been trading at a valuation which are higher than that of large caps. And also the earnings expectations for these two baskets have been higher than that for Nifty, which is around 14 to 16% over the next 2 years. So to that extent, I think delivery of earnings going forward for mid caps and small caps would be really crucial for them to sustain these valuation levels or to move higher from these valuation levels. So our base assumption is probably the volatility would be higher in terms of mid and small categories from here on, as most of the positive have already been discounted. And now it depends on how earnings trajectory comes through for this basket in terms of sustaining these levels.
Let's talk about your fund, Kotak Flexicap Fund, and help us understand how is the market cap exposure divided between large, mid and small cap?
Over the years, we have stuck to our discipline of maintaining a large cap tilt in this fund. It's not because of the size that it is managing today, but even when the fund was small, we managed to look at this allocation pattern so that the investor who comes into the fund is taking a known risk in terms of what's the allocation and how it's going to move forward, irrespective of the cycles. So clearly over the years, we have maintained about 65 to 75% allocation into large cap, and the rest goes into mid caps and small caps. The current allocation would be about 71% large cap and the rest in mid and small caps. We do not have too much cash in the portfolio as of now.
All right, which also means that you are fully invested, but then it also seems to be that you are a completely large cap biased fund. What are the sectors that you're holding in large cap category, and are these sectors the ones that you are banking on in upcoming quarters as well?
We have been looking at sectors which have been resilient in terms of growth as well as in terms of earnings going forward. We should have a kind of a steady earnings coming through. So from that respect, we believe that banking and financial sector as well as autos would be two sectors where the demand conditions are quite resilient, and also earnings expectations are quite strong as compared to the market. So these are two overweight positions in the portfolio. Along with that, we also have overweight on cement and industrials, which are closely linked to the economic activity in the country. And we clearly see that improving over the next couple of years. And also there are other levers in terms of margin improvement triggers that would come by as commodity inflation moderates going forward.
Let's talk about the banking sector now. We've seen that post results, there's not been much uptick in the pricing of these stocks. We've not seen stock specific action post the results also. How do you analyze the situation? Do you think that because of the result, the run-up is already peaked out in these particular stock, and which is why we did not see any movement, and now everything is actually depending on the new year's first financial quarter results, which will be obviously on your radar as well?
Some of the short-term movements are very difficult to predict, but clearly the overall banking and financial sector has been one of the outperformers over the last several quarters. And we do believe that as earnings growth trajectory for the basket is much higher than that for the market on an average, we should continue to see outperformance. Having said that, I think the kind of re-rating that we have seen in some of the names over the last year and a half also limits the kind of outperformance that you would see from this basket. It will be more from a bottom-up perspective that you'll have to choose right banks and right financial services stocks to make money from here on. I think the uniform up move that we saw in the sector maybe is coming towards its end.
And what are your sectors in mid-cap and small-cap category?
Some of the sectors that I mentioned, which are domestic-oriented sectors, banking and financial services, auto, cement, industrials, these are some of the sectors which also have representation from a mid-cap perspective in our funds. Along with that, there are several other bottom-up mid-cap ideas which may not be forming a big sector or a big exposure overall, but we do have several other smaller mid-cap and small-cap names which are looking good from a valuation perspective as well as from a compounding characteristics from here on. So those are the names that we hold in our portfolio.
Let's talk about few factors that might just ruin our market sentiment right now. Monsoon, that's a major concern. Do you think that's going to be a dampener?
Clearly, it's been a concern as of now. We have seen quite a bit of delay. Usually, we should have seen onset of monsoon by this point of time. Having said that, I think we still are at the early stages of the season. So to that extent, there is still hope that things will turn around as you go forward. And another point is while everybody believes that rainfall is critical for rural economy, over the years, the dependence on agriculture has reduced, and it's only about 40% of the rural economy which is dependent on agriculture. Rest of the rural economy is also dependent on various other areas, including infrastructure and sectors similar to that. So, in a sense that if in the worst case monsoon gets impacted, we may not see the kind of impact that we have seen in the last decade or maybe 20 years earlier, where our rural economy was more dependent on agriculture at that point of time as compared to several other sectors. The second point is, if you go by the kind of past data, you will notice that whenever monsoon has been lower than 6% as compared to the normal rainfall, that is when there has been a bigger impact in terms of overall economic growth of the country. Until unless it is not so a big disappointment, I think we should be able to manage that. And also, we know for a fact that last couple of years have been good in terms of monsoon. So the water levels overall have been better this time around, and we may not see that kind of a big negative impact. Overall, I think it's too early to take a call on monsoon, but definitely it's going to be crucial over the next few weeks to see how it pans out and what's the kind of impact that you would see on the economy, especially the rural side.
Harsha, last question to you. Now, does having more than Flexicap fund make sense for an investor, given the fact that most of these funds are large cap biased? So even if one wants to have a Flexicap or more than one Flexicap, should they really look at the market cap or diversification before adding a Flexicap or more than one Flexicap?
Clearly, this is one of the segments where any regular investor should have an investment into. This gives you a kind of an exposure to the market, which is also in line with whatever you see in terms of the broad indices. For example, it gives a reasonable exposure to all the three market capitalization segments. And also, a lot of people believe that most of the outperformance comes only from taking an exposure to mid caps and small caps. That may not be entirely true. For example, what we practice in our fund is also to take concentrated sector bets. So it's the investment approach is two-pronged. One, we take a top-down approach and try to select sectors which are likely to outperform the overall economy at any point of time. And once we select those sectors, we try to look for bottom-up opportunities within those selected sectors. So having a sectoral deviation itself is likely to give you outperformance if sectors are properly selected and the stocks therein. So on top of that, taking a mid cap or a small cap exposure is additional risk. So to that extent, we are very, very conscious of how much risk we want to take in this particular fund. So it will be a combination of our sectoral deviation as well as our mid and small cap allocation. So it's not going to be only a mid cap or a small cap allocation, which is going to drive likely outperformance in the fund. It will be a combination of both.
All right, that will be all. Thank you so much, Harsha, for being on the show, helping our viewers with all the aspects of Kotak Flexicap Fund and also the strategies they might want to adopt as per the market movement. Thank you so much. All right, we move on and time for a quick break, and then post that, let's talk about Indian markets, which are inching towards life highs, and the recent data and the profit that you're seeing on your portfolio. All of this and more after this break.